and trade. And this is now our largest trading partner. This is our single biggest partner in the world to come. And the supply chains that we're reshoring, almost all of them that matter, have a big Mexican component. And so if you interlace the drug war into that's a huge problem. It's not guaranteed. AMLO will be gone in a year and a half. And
well, we think term limits can sometimes be.
Well, he tried to amend the Constitution already and failed. So he personally will no longer be the president. Doesn't mean that he can't undo some of the democratic reforms that we've seen in the last 30 years. So the risk is there, but the risk of him being the big guy is not. And there's nothing to say that Jalisco New Generation might disintegrate, because the drug cartels in Mexico tend to do that from time to time. But that is the biggest risk, in my opinion, to the American way of life and the American economy.
And we have to end with demographics because It's so important to a lot of the work you do. The trends tend to play out over decades, so people can ignore them or not appreciate them as much. But are there implications in the shorter term when it comes to demographics that we need to be paying attention to?
Sure. So the issue is, as your population ages, it depends on where the bulge in your structure is. So if your bulge is for people 45 and under, you tend to be a consumption-led society, very high growth, very high inflation. If your bulge is people roughly 40 to 65, you're a technocracy because you have older people, not a lot of consumption, but a huge amount of capital. That's where a lot of the advanced world has been for the last 20 years. And so that's one of the reasons why capital has been so cheap. It hasn't just been monetary policy. It's been that the baby boomers have been at the capital-rich point of the world. Well, in the fourth quarter of last year, the majority of the world's baby boomers had aged into mass retirement, which meant that they were liquidating all of their savings because they can't have a very forward-looking portfolio when you're in retirement, because if there's a market crash, you lose everything and you no longer have the income to recover. So capital costs are going up, and they will continue to go up for the next decade, independent of what happens with the economic cycle or the Fed. That is now baked into the cake. We have passed the Rubicon, and we are never going back to the financial environment that we've seen in the last several years. In fact, we shouldn't expect capital costs to start coming down appreciably until the millennials are in their 50s. That's not until the mid-2030s. So everything that we have to deal with now, starting now, we have to do so with less capital. And that is going to radically slow the rate of economic growth. Now, if you have capital in this environment, and I'm looking at you, Gen X, out there, because all Gen Xers are in their 50s now, and assuming you can keep it away from the tax man, big detail, the rate of return you're going to get is going to be significant because we just don't have a world awash in free money anymore. But there's not enough capital for what needs to be done. So there's pros and cons based on who you are and what you need.
Yeah, you mentioned tax rates, if you can avoid taxes, which is a big if. It sounds like you think those are all going up.
Well, the baby boomers have built into the system a very robust, very generous, very expensive set of benefits for themselves. And because life expectancy in the United States is in excess of 70, they are going to be able to vote to preserve those for a significant amount of time. And the millennials, the second generation, biggest generation we've ever had, does not want the baby boomers to move in with them. From their point of view, living with their parents was a one-way experience. So you've got the two biggest generations in American history voting for a very robust benefits program that all has to be paid for by Gen X. And there's not enough of them. So in any ballot box competition, Gen X will lose. So it'll be a fight for Gen X to benefit from their financial position.
Peter, a lot to think about once again, as always, when we catch up with you. Thank you so much for that.
Not a problem.
Has it really been a year? Peter and I joked at the start of the interview, but so much has changed since Russia invaded Ukraine that it's sometimes hard to process all of the repercussions. In this conversation, we tried to sift through the fallout and look at how the war has accelerated some major political and economic shifts. Peter sees the breakdown of global supply chains as one of the biggest casualties of this war. This is no longer just about supply shocks in energy or food. This is a reworking of the global trade system. If you recall in Roger's interview with Dario Perkins in this series, Dario talked about more regionalization that's ultimately inflationary and will lead to slower growth. Peter shares some of this view and raises the alarm level. The major pain points. Number one, Russia. Zeihan believes it is still their war to lose. It's not economic for them, and this will continue, meaning regardless of the outcome, Russia's out of the global supply chain for decades. This carries huge implications for energy, commodities, lumber, as well as palladium used in semiconductor chips. Number two, Peter continues to believe that China's economic system is teetering on the edge. They need to mend relations with the West, but President Xi has insulated himself so much, it's no longer clear whether rational minds will prevail. Peter predicts the days of China as an internationally engaged, economically wired country are waning. If true, this runs counter to the China reopening narrative, which suggests that the reemergence of China onto the world stage will help boost global growth. We already saw some of those hopes dashed by China's recent, more conservative growth targets. As bearish as he is on China, Peter doesn't see an invasion of Taiwan, but he is concerned some bureaucrat looking to curry favor with top leadership in Beijing will do something inflammatory. Third, and perhaps most controversial, Germany. Peter worries the loss of the Nord Stream pipeline and strain on natural gas supplies to Europe spells the beginning of the end of the entire German industrial model. Now, this is an interesting statement, especially since natural gas prices, which spiked following the invasion, have fallen sharply, correcting back to pre-war levels. Peter argues the fall in prices is due to temporary factors which won't last. He details some solutions the Germans are pursuing, but warns that time is not on their side. The loss of this manufacturing financial engine is not just an issue for Germany. He calls it a potential death blow to the EU. Now, his thesis is certainly not mainstream and runs contrary to investor sentiment. The Euro Stoxx 50 index and German DAX are both up 20% in the past 6 months. As always, this is a conversation about probabilities. We touch on some of the things that could happen to mitigate these risks, but Peter believes even if some of them are resolved, the forces reshaping supply chains are irreversible. Reshoring will come at a huge cost. Capital will be diverted, labor will be needed, and inflation will soar. How high? Peter's guess, 9 to 15%. Now, if there's good news here, it's that Peter sees this as a growth story, not an inflation threat, which puts him in a different camp than some of the other guests in our series. He predicts countries that are building up new regionalized supply chains will see rapid growth. But for those who used to dominate, it will mean stranded assets and declining power. The other bit of good news is that the severe energy and food shortages predicted at the start of the war have been averted. For now. Fine-tuned sanctions gave governments breathing room. An unusually warm winter in Europe helped. But Peter warns the economic implications of the war have been deferred, not resolved, and time is ticking.
Hey there, revolutionaries. To join a community sharing insights like you just watched, head over to realvision.com. There you will get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Be a part of our community of lifelong learners. See you there.